I say that it starts with digitization. There's digitization and tokenization. And when you're working with a real world asset that is complex and tangible like real estate, you have to figure out first, how do you start to digitize documentation, information, and workflows?
Is blockchain enough to do this, or are there any other technologies that you use in this whole process, like maybe IoT, AI, ML?
Some people are even saying we're going to start assigning personalities to buildings, and it's going to say, I'm underperforming and here's the reasons why. Or
Wow.
it's a little science fiction, but we're not far off. Because
According to you, which technology is going to have more dominance in the real estate industry, which you can see from the kind of interactions you are having?
if you're not appraising an asset and valuing it frequently, then there's no price discovery, and we can't use it in capital markets, which is the real reason why a lot of this illiquidity exists.
I would love to understand that, like step by step, if you can put it in plain words, how do you take a building and tokenize it? What's the life cycle? Hey Matthew, welcome to What Are You Tokenizing? Really glad to have you here today.
Hey, good morning, good afternoon, and good evening, because we're on opposite sides of the world. Thanks for having me on.
Amazing. So just for the information of our audience, where are you calling from today?
I am in the state of Georgia in the US, which often gets confused with the country of Georgia. It's East Coast time, so it's about noon, lunch hour for me.
Amazing. And before we start, with the questions and all the information that you will be sharing with the audience, I would just like to highlight something in the start. You are leading Building Dotting. That's in the space of real estate tokenization. As far as I can see in the recent news and in all the newsletters that I have tapped into, everyone keeps talking about real estate tokenization, while most people do not completely understand it. While we see a lot of news with big real estate names pitching in that they're tokenizing now, they're considering, they have signed a contract and whatnot, it still keeps everyone wondering what exactly is happening behind the scenes. And I'm sure with this podcast, with your insights and your experience, we'll be able to get into that insight.
100%.
Amazing. So to kick things off, I would love to, love for you to share what your experience has been, Web3 and otherwise. There is one key point that I would like to highlight a little later in the podcast, but please.
Sure, absolutely. So I've been in the space since 2020. That's when I started sinking my teeth into commercial real estate and blockchain technology. And I happened to dive into both at the same time. And it's become my entire personality, to be honest. But it's been such an evolution, understanding the technology, growing as an entrepreneur, and then understanding what the market wants and needs, because the conversations that we're having now in 2025 are very different than 2020, and even different than the first case studies that came out about real estate tokenization in 2017, 2018. So it's been a fun trend to follow as the technology finds its true use cases, and we try to emphasize that and figure out where the real alpha is, where the value that can be added to real estate developers. So my journey has been going to real estate developers, property owners, asset managers, people managing portfolios, and understanding what they actually want out of the technology. A lot of people lean into fundraising, or they suggest that this creates liquidity. And there's some truth to these, but for a really established real estate developer or asset manager, that's not the reasons why they're going to use the technology. If you already have a network of investors and you have banks, you don't need blockchain to create money for you. You have the networks that you need already. You're going to be looking at different use cases, whether it's transparency or operational efficiency. And I say these things with confidence because we've worked with hundreds of millions of dollars of assets and had so many phenomenal conversations around the world that have added up over the years. I've been able to identify what folks actually want and how we can deliver that, and how we believe we are following through with a platform that helps in all those areas.
Amazing. And this is a kind of understanding that can only come when you do not just jump into an industry just for the sake of it. As you rightly mentioned, real estate owners already have a huge access to liquidity and investors. They do not need blockchain to solve that. This is what's been lacking in the industry. And that's the point I was hinting towards, which is why I wanted to have your a traditional experience as well in the perspective, because generally whenever I go to any conference, there is a very common term that's used. Most web3 entrepreneurs, they create a solution, then they try to find the problem. And like, I'm very open about it. I even name such platforms like the industry that such platforms are in. For example, document verification and document signing platforms. Most of them first create a solution, then they try to fit in, okay, let's see if it gets into education, if it gets into migration, if it gets into something else. And same happens in all industries. But when you come from an industry experience perspective like yourself, right, that's when true solutions come forward. And I'm sure we'll get to know a lot more about that. So while we are, in the process of understanding what you're currently doing, I understand your experience has also been into capital markets before you entered this industry in terms of blockchain and commercial real estate. Please enlighten us about that.
Yeah, real briefly, it was day trading of small cap equities and derivatives or options. I call it my street knowledge of investment banking. I wasn't working with a firm or as a fund manager, I was just self brokering, but well, with a group of individuals, and we would go out and we would analyze the market with technical and fundamental analysis. And I always highlight this because it is and has been essential to understanding how money moves in the market, whether it's traditional or DeFi. And then when you tokenize something, what are people actually looking for? And if you're seeking liquidity, how is that created? How do you create buyers and sellers and allow those transactions to occur? What are they looking for? What data do they need access to? What data creates prices? So I've been able to use a lot of that knowledge that has accumulated over almost a decade now and apply that not only to commercial real estate, which is both an industry and a market, but the tokenized form of that and trying to bring people back to these first principles. Forget about the technology. What do people want? What makes people transact? So I'm glad that you mentioned that because it is a very important part of my journey.
Amazing. And I personally believe from this tone of conversation, the word DeFi came to you naturally. You didn't have to force it into a conversation. You could see where it actually fits in the whole scenario. And that comes from a traditional experience. And even though you mentioned that you're going to work with any big industry providers as such in the capital markets, but still that experience is the kind of like a bedrock of what you are building next and makes you envision on a much larger scale how exactly the asset moves. So while that asset moves, the liquidity becomes easier. What is the process that you follow? I would love to understand that, like, step by step, if you can put it in plain words. How do you take building and tokenize it? What's the life cycle?
So I say that it starts with digitization. There's digitization and tokenization. And when you're working with a real world asset that is complex and tangible, like real estate, you have to figure out first, how do you start to digitize documentation, information, and workflows? Because if you just jump to tokenization, you've taken a cutting edge technology and a wrapper of value, which is what a token is, represents something, but it's going to be shallow or hollow, that'd be the better word, if you don't have all of the information digitized to back it up. And if you don't have the rails in place to not just do that once, but time and time again. So when we approach a real estate project, it could be a new development or maybe it's an already built building. The first thing that we try to do is instill a digital first mentality with the property owner. They have to understand that they have a responsibility to take documentation, whether it's architectural and engineering plans, market competition reports, waterfalls, income reports, income and expense reports, all of that information and operational stuff, maintenance, that has to be digitized. It has to be collected. You have to know what you're looking for. It needs to be uploaded into a common data environment, which sometimes is called a CDE. The easier way to think about this is a data room. It's a room where all this information is going to be stored securely and efficiently. Walk them through that process. What information needs to be in there? How do we make it machine readable? How do we make it accessible? How do we start to verify that? And this is the first place that we introduce blockchain. It's not the tokenization, but it's in the back office because you can use it to hash or anchor documents. You create a hash by anchoring the documents, and this adds a verification or proof of state of that information. Sure, we've got the documents, we've put it on a computer somewhere, and we've uploaded it for everyone to see, but how do we identify that this is an original format? So first we've digitized, we've introduced a little bit of blockchain here, but we also want to make sure that there's a pipeline of all this information as it moves on chain and into the value version or the value format. Because data on its own could be worth something, but how do you define what it's worth? And that's where the bridge where building comes in. This is actually our specialization. It's not just digitizing things and it's not just tokenizing things, but it's creating the relationship between those two elements, because we know that the bridge between that is the appraisal process and how you calculate that, how often you calculate that and create a valuation for the asset, how you move that information on chain, how that's reflected with risk and rewards, so that you're not just showing price, a token price, it's $50, but what it has been and what it could be. All of that context is extremely important. And then again, backing it up with the verification element saying, okay, there's a number and there's a projection, but it's something that I trust. So I think of tokenization as the last step in a long equation. First, you got to make good real estate. That's number one thing. You have to have good real estate. Then you need to start to digitize those documents and workflows, get it into a data room, hopefully an intelligent data room like what building offers, verify that information. Then we can start talking about a smart contract and what valuation models we're going to use that's going to reflect the value of the tokens under that smart contract, and distribution options from there. A lot of people just jump to distribution. They say, well, I have real estate, I have
Exactly.
ownership, let's just start to sell it. And they miss everything in the middle.
I think that's that's the token mentality that still lives in people, right? That okay, I just created a token, start selling it.
Right.
I need more money. So, but that's amazing what you're building. How you explained it. While you are creating this bridge, it also gives you the freedom to tap into the markets that have already digitalized their land records. Right. It makes it easier for them to skip that first step and be into that tokenization mindset and keep carrying it on. Obviously, introduce blockchain at the start. And there is one episode that we have already recorded. It was with a legal expert, and she told us that any asset that has to be tokenized has to go through three stages. Number one is the issuance, second is the management, and third is the distribution. And while most people are focused on issuance and distribution, as you rightly mentioned, right? It's my property, that's just tokenized and start selling it. The biggest step that they are missing is management of that token, management of that asset, valuation of that asset, the data of that asset, and you're doing exactly that. So I'm sure when people are able to connect these two episodes together, they will see that this is the most legally compliant way to do a structured secure tokenization of their asset, which can actually go long term rather than just being a PR article.
Right, right. You want something with sustainability and managing the token. You have managing the token. So what wallets is it sitting in? Who's allowed to trade? What's the value of it? But you still have to tie it back to managing the data of the token and managing the real estate. And you have to make sure that all three of these items are in effect, because you could be making changes to the real estate, to the insurance policies, to the maintenance, the tenancy. And if that's not reflected digitally, then it never makes it to the token. And now you're holding a token that doesn't accurately represents what's in the real world. And institutions are absolutely not going to play that way. Maybe a retail investor will, but an institution says, oh, I see a token on the secondary market, I'm going to put $10 million into it, but I need to perform my due diligence. I'm not just going to buy on price alone. I need to go back to the asset. Lo and behold, it was appraised 5 years ago, and a lot of this information is outdated. That's risk. If I'm an institution, I'm opposed to risk, and I'm not going to get in.
Exactly. And even if we don't go into institutional, even retail investors, you cannot break the geographical barriers without first going to digitalization of the asset, right? Otherwise, as a retail investor, even so, I'm currently in North India, and I've seen a lot of people in my neighborhood who have bought properties in South India and they've lost them, right? So before even tokenizing the ownership, even establishing the ownership, as you rightly mentioned, having the blockchain part and establishing the ownership, that's the first step that needs to be there, no matter what the industry is. Amazing. So is blockchain enough to do this, or are there any other technologies that you use in this whole process, like maybe IoT, AI, ML?
Yeah, all of the above. So blockchain is a great technology for provenance of information, recording where did this come from, who was responsible for it, when was it updated, and where is it at currently. It's a beautiful immutable ledger. However, for real estate to be successful, there's so many technologies involved. And I always call back to this. we were talking about how some people create a solution and then they try to apply it to a legacy industry. Myself and my team were coming from this outdated industry, construction and real estate. And so we recognize the problems, and we know that forget about the tokens, real estate has problems, and you need technology in place in order to make it a better industry, asset class, and perform in capital markets. So there's a wide range of softwares or technologies in general that are necessary. IoT is certainly one of those. What's going on the job sites or in the asset? How do we get raw data? How do we capture that and know about the environmental impact or the energy efficiency? What's going on with the foot traffic or the road traffic? This is all very important information. There's also sensors, so certain components that have an operational function, they have wear and tear. And so you want to know this is at 70% of its quality, its health, it's deteriorating. One, there's value associated with that, but two, it could help us predict maintenance so that if suddenly the lights go out and there's no hot water and your tenants start moving out, well, that's a domino effect, and ultimately it impacts the return on investment, which are your investors. And they would love to know that you have technology in place to create better real estate. Software as a service, is all sorts of different platforms out there now that have different functionalities to make better real estate. Artificial intelligence is huge, right? That it's not just a buzzword, it does have practicality. And in something like real estate that has so many data points, more information than humans could possibly and properly process, you need machines. You need machines to find trends, to pull out keywords, to interpret this, and then place it in a way that humans can act on it, to separate signal or important information from all the noise that's out there. Especially when you have IoT, you're going to have more data than you know what to do with. So you just need some way to isolate the important stuff, and AI does that phenomenally, especially in terms of reading trends. So you have all this data, and there's some phenomenal statistics out there about how much data we're going to be that we're going to have over the next few years. I mean, it's expected to grow by 400, 500% over the next few years of what currently exists. And there's already, I don't even know the largest number that I should come up
shitload
with.
of data.
Yeah, right. An unbelievable amount. Catching up to the number of stars in the universe, I'm sure. So you have all of this information, and it's only going to grow. How do we process that? How do we do that properly? And then you start making investments out of that. Well, investors are overwhelmed. Sure, there's a bunch of tokens, but what are all the thousands of inputs that have gone into calculating the value of each token? How do I determine the risk and reward of each token? How do I know which token is right for me? And then it's sitting in my portfolio, and you have all these variables. Time is going by, weather events are occurring. Some managers, property managers, are doing their jobs, others are not. That's just overwhelming. I think AI and to perform certain functions, whether it's narrow AI or broad, or reaching into the more general intelligence, like the agentic AI that's going to help us make maybe portfolio decisions. All of these are extremely important. And then you add in language models. Some people are even saying we're going to start assigning personalities to buildings, and it's going to say, I'm underperforming and here's the reasons why. Or
Wow.
it's a little science fiction, but we're not far off, because I could upload a bunch of documents to ChatGPT right now and say, like, what's the good, bad, and ugly about this? And of course, I have to prompt ChatGPT for that. But if a property could identify its issues as they're occurring and let us know, and then we act on that, tying this back to tokenization, what's happening is that you're improving the value of the property, which is improving the value of the token and its projections, and the token is in our portfolio. So you want to know that a really thorough technology stack is being implemented in each one of these properties, not just tokenization. The real estate developer or asset manager should not just be jumping to tokenization. You should want to know that they've modernized and digitized their actual real estate first.
100%. So many insights I could get from that statement. Whenever new technologies come, the first thing that people do is see how they can make more money with it. That's what's happening with real estate. They are using AI and IoT to figure out which areas have been growing in terms of real estate, where I should invest the next, create the next portfolio of mine, how I should flip properties to make this property green property of mine, all of the crazy stuff, right? And even when crypto came, I was talking to someone in Miami a couple weeks back, and he told me that in 2017, the first crypto interaction he had was by selling a property and doing transaction. So that's how all technologies enter real estate market, sadly, just for firstly the financial instrument. But eventually, this is where it has to lead and improve the industry altogether, not just copy words like transformation, but actual evaluation of the evolution of the company, of the industry. Now, with IoT devices, yes, data is there. Shitload of data plus shitload of data equals a shitload of data. That's a, I think I heard it somewhere and it got stuck. But and just for your information, I'll share something. I am in India right now, as I mentioned. Here, whenever we buy a new property, if it's a retail property, we know for a fact that the builder has not used good material. If it's a local builder, we know it's not structurally integral. It's going to fall. It's going to have a bad impact. Right? That's where your health concept clicked too much with me. That this is something that should be there even for smaller buildings if it becomes feasible, which agentic AI may make it. And then later on, if I don't go for that kind of a property and I buy something in a big building as a flat, where the builder is more renowned and more trustworthy, I need to be sure, is it going to withstand how much level of seismic activity or some other activities that are going to be there. Again, with IoT data that's there and AI using that data, I could see where you are envisioning these technologies coming together. But this really fascinates me. I'm looking forward to seeing real estate having this kind of transformation. So you mentioned something in between that really got me curious, that you are also tracking the asset value, the valuation of the properties. And I also saw something on your website that you have live asset valuation. What's that about?
Correct. So we want to get as close to a live asset valuation as possible. This is what we call always on real estate, or 24/7, 365 mark to market. And mark to market is the process of identifying the fair market value and the tradable value of a real estate asset or any sort of asset. In order to calculate this, there are some defined inputs. So valuations aren't just created. Some people think that's how it works. But at an institutional level, there's a very clear expectation of what information should be collected, when it should be updated, who has to look over that information in order to identify the value, the true value, the fair value of an asset, a real estate asset. And once that fair market value is identified, buyers and sellers agree on that. That's market order, essentially, if you think of trading. If that information is not present, then you're going to have a seller who wants more for the property and a buyer who wants to pay less for the property. However, the data says the market needs to meet in the middle. There can't be a spread, because if there's a $10 million difference between what the buyer and seller wants, then the transaction doesn't occur. But if that spread with enough data no longer exists and promotes liquidity because the transaction is going to occur, then it does. And if we can start to replicate that for private market assets, so real estate sits in private markets. If you think about what a public market is, that's Apple, that's the major companies that have listed on a stock exchange, and you can see all the information about them. Real estate assets, whether it's commercial, residential, or otherwise, sits in private markets where that data is not available and the expectation to have that data is not there. And so there's always going to be a spread. And that spread is what causes deals to slow down tremendously, because we're going through due diligence and I say, this property is not worth what you're claiming. And the seller says, of course it is. And maybe he's just a really good salesman and we follow through on it, or maybe we don't. But it prolongs the transaction phase. So there's a misconception that if you tokenize something, it creates liquidity. And people say, well, you could have instant transactions. Maybe the transaction itself, like the actual execution, sure, it's a click of the button. Everything that leads up to that still takes 12 months, because you have to underwrite the property. You find out there's a bunch of issues with it and it needs to be repaired, and that the value that they're asking for was completely incorrect. So if we can be more proactive in how we're collecting information, have that presence, and then have a valuation that's reflective of all the latest information, then we no longer have to backtrack or spend months in due diligence. We know what the asset is worth. Now, the second major use case for this is when we go into secondary markets, because if a token has been circulating for a while, We want to see the change in value. If a token just stays at a flat value, I can't speculate on it. The buyer, the original holder of it, hasn't gained anything. I don't know why they would want to sell it. And then why would a new buyer want to enter? So if there's no information, there's no trend, and we trade on trends. We think this is going to go up. We think this is going to
Exactly.
go down. And the only way that you can display those trends is based off of some sort of proactive real-time valuation. Just think about if looking at the stock market or any sort of crypto price where this is going up, this is going down, I'm going to get in, I'm going to get out. That has to exist for real estate in some capacity and in a standardized, trustworthy way. You can't just say, well, my property has doubled in value because it has. That might trick a couple people, unfortunately, but we're not trying to introduce tokenization as a new way to scam people. It's supposed to be the financial rails for the next 100 years that power capital markets. So standardized institutional grade valuations that can be trusted and update so that we can make decisions on how we buy, hold, or sell real estate.
And do you, so you rightly mentioned, you don't want to introduce a way for the market to manipulate through a new and improved version, right? So are you putting this data as well on blockchain, the asset tracking and the due diligence part?
Yes and no. Not all information can be accessible. Another reason why private markets are private is because people enjoy their privacy. What might they want to keep private? Personal information or intellectual property. And so you can't just have that readily available. Usually that's going to sit behind closed doors in a data room where only certain verified stakeholders can get access to that. And so you might be thinking, well, if all of the information isn't present, but you're creating valuations, how do we trust the valuation that's created? And this is where the blockchain is useful once again because of zero knowledge proofs.
Ah,
So we can have zero knowledge about the information and all the details, and maybe we don't want to violate GDPR or ISO or SOC 2. Like, information has to be protected, but we can still verify that the information, the documents and data was collected, that someone looked over it and they authorized it. Maybe it's a valuation provider, and we can see that on a public ledger on a blockchain. So we can see that there's a series of verifications that have occurred without always revealing the details underneath. And this is important for a few reasons, and it manifests in a few different ways. If I am about to trade a token, I want to see that a series of verifications have been performed, and then also that certain tools like risk metrics have been applied to this. And there's companies that are working on this. For example, Particula, which I believe recently they closed a very large investment round, and a lot of people compare them to an S&P or Moody's for tokenized assets. If an issuer first works with a company like Building to organize their data and verify it, and then goes to Particula to have risk assigned to the risk ratings assigned to their asset, and you could say this is a double A, and it's going to be constantly updated. Now built a lot more confidence in the token or the digital financial instruments that you're trying to offer to people. There's ways to show that the underlying information is good without necessarily revealing everything.
absolutely. I loved the way how you explained that. You know, I mentioned this to you before. I have a small book titled Why Blockchain, and the subtitle on the front page reads where privacy and transparency coexist.
Yes,
It always
perfect.
makes, I have it right here. It always makes people wonder. I don't want it to turn into a promotional activity. I'm just sharing for the sake of it. So I'll just put that, where privacy and transparency coexist. It always makes people wonder how exactly that happens. And this is exactly what I mean by that statement as well, and where future is heading. You don't have to share your credentials everywhere. Just, share a code and other people know that, okay, you are authentic. Same goes to any industry which you want to apply. That's the beauty of zero knowledge proof. And this is the perfect case study, like you just mentioned. And I'm sure a lot of people will gain a lot of knowledge about this. If they are reluctant, they should definitely be motivated. And if they don't know about ZKP already, this will make one wonder for sure. And this also answers my next question I had in mind, that, how it improves the due diligence and the asset management by that live tracking that you are doing. you're solving multiple problems with a single solution that you're already enabled in the market. Amazing. So while all this seems very, I'll say, dreamy, right? That okay, these are the challenges that we are going to solve. It's going to become so easy, and zero knowledge proof is making it much more scalable in terms of verifying without sharing your information and all of that. There is always one concern that most investors, most issuers also have: how easy it is from a perspective of compliance and regulations. So what are the steps that you are taking to include that compliance component in all of the processes that you do?
I like to emphasize that compliance comes in multiple shapes and forms, and we've considered them all and implemented solutions respectively. There's tokens, and tokens have regulation. When you tokenize something, often you're creating a security out of it. And so there's compliance. What investors is this available to? How can they trade it? How can they use it? And each jurisdiction has its own regulations there. That's just going to depend on how you roll that out and if you want to tokenize at all. Not everyone who digitizes has to tokenize. You can use existing frameworks. In the US, you might as well tokenize, because if you digitize and securitize something, so create an investment out of it, it follows the same laws when you tokenize it. But that's not true for the EU, for example, that now has unique laws about what a token is and how it's different than traditional securities. So it's just jurisdictionally dependent. Prior to that, though, there's still a lot of compliance that goes into owning real estate, constructing it, operating it, managing the data around that. Going back to the private markets, there could be internal compliance within a firm about what information is available, how you take and store other people's information and their private information. There's compliance about that. And especially if you have a data room, you start to digitize it, it could become more accessible, or there could be security issues. So you have to be considerate of that. How data is held onto over the lifespan of an asset, how valuations are created, how you calculate that, how you treat that number. Because if you're wildly off, in some ways you're committing fraud. If I formulate a false number about my investment value and come up with projections that are not accurate and solicit that, it's securities fraud, and then it's a whole bunch of issues. So there's compliance on multiple levels that have to be considered. And some of the solutions here are just built into a product like ours, where you have to consider a GDPR or SOC 2 or the International Organization for Standardization, ISO. They have all sorts of standards about how airplanes should be built and how real estate should be operated, or how information should be handled. And then finally, the tokenizations. We can work with broker dealers, which is a requirement here in the US, in many cases, to custody or transfer securities, or you can get a transfer agent or other parties that are going to be involved in all of that. And then there's also reporting requirements, which is that information, if we're managing investments, certain information has to be presented, and it has to be done so routinely, maybe quarterly, maybe annually, and presented to the right authorities. And we assist in that process by having the information ready, and you can template that and you can verify it, so that when I have my quarterly reports or my annualized trended returns, whatever it might be, and a CPA, certified public accountant, signs off on that, or an auditor or another third party, they can do their job very quickly and demonstrate that we've done our job collecting information, owning and operating the real estate, handling our investors, and making them happy. So compliance is extremely important, and the industry won't move forward without more consideration for compliance, and that's why we emphasize it. And I think of it as creating a gold standard for tokenized real estate, something that all issuers and tokenization platforms can aspire to. You're on mute.
Sorry. So I was just saying, when it comes to compliance, there is, no information that's enough in the world. You can read as much as you want. You can, try to explore all angles that are there, but still there are many compliance related things that you need to understand, especially when tokenizing assets, especially when handling, a diverse regulatory environment. Someone sitting in Europe who wants to tokenize something in US, or someone sitting in US tokenizing and selling to Europe or Asian countries. It's all very complex, but really glad to see that, apart from just tokenizing, you're assisting people in that regards as well. That's a key component. So can you share a case study, a building that you have already tokenized, which unlocked? I know you cannot name names, but still any reference as well that can help us understand the kind of numbers, the timeline, the capital raise, whatever you can disclose.
Sure. I'll share two examples and they have to be confidential, but one is through a private equity partner of ours. So it was running on the operating system and can't take credit for the execution of it, but I can demonstrate how the availability of data changed an outcome for this property. I can even borrow two examples from them. So one, usually to revalue a large portfolio with dozens of properties, this can take many months because you have to find information about each property, have it readily available, take it to an appraiser, and they appraise each one of those assets. Not only is that a prolonged experience, but it can be expensive because there's lots of parties that come in and they are all charging hourly rates to do their jobs. And so this is why you might not appraise or value a property more often than you have to because of the costs associated with it. But as we were mentioning earlier, if you're not appraising an asset and valuing it frequently, then there's no price discovery and we can't use it in capital markets, which is the real reason why a lot of this illiquidity exists, because there's no price discovery. There's no price discovery because creating a price is slow and expensive. So in this case study, they demonstrated that you could revalue a large portfolio in mere weeks instead of months and months and tens of thousands of dollars spent trying to perform that process. Another example was a large retail transaction that occurred. It was a $1 billion asset. And usually to first underwrite a property of that size would take a long time. Could be 2 months, 3 months. And then performing due diligence for a buyer, or the buyer is performing their due diligence, can also take a long time. And in this case, the underwriting was performed in 2 weeks. And then by week number 4, the transaction was completed. Just
Amazing.
because all of the data and all the necessary documents were uploaded to a data room, easy. But then everything was verified with blockchain. And so it demonstrated authenticity and metadata was included. It's not just the information, but who, what, where, why, when, how. And this adds so much context to the information. In addition, when you're preparing your financial projections or you're showing historical financials, if you can link that to a source document, this is what we call auditability. So you can have a bunch of numbers, but let me see where this number came from. Let me click through hundreds of numbers and take it back to the original verified source document and do that in one platform. This is where things usually break, because information is sitting in siloed systems. It's on my computer, it's on your computer. Someone has to send it over WhatsApp. This hasn't been updated. We thought we had it, but it's in a Google Drive that we don't have access to anymore, and it's incorrect. File won't open because it's corrupted. This causes all sorts of issues, and this is where deals get drawn out. So if everything is in one place and it's accessible and verified, and we can routinely perform workflows. So let me go through and check on this and update it if necessary. Just streamlining that whole process, it has a ripple effect where anything down the line is performed considerably faster. This is the 24/7, 365 readiness. I'm ready to sell at a moment's notice. I'm ready to insure or reinsure the property at any time because data has been taken care of. Anyone can trade or transact on a secondary market or use it as collateral. And if they're using it as collateral, maybe they want to reallocate their portfolio, right? Just click of a button, tokens trade, we've swapped. But you have to be ready for that. If the property itself isn't ready, then the transaction never occurs. And then in our case, in building, which also includes pre-construction and construction data, while other use cases are more around private credit, we're thinking more vertically and how to capture all that data and maybe use it for better operations, better maintenance, environmental impact. We're handling about $100 million of real estate assets going through our digitization pipeline. Some of them are ending up at tokenization, but a lot of it's just going through digitization. And we're handling all sorts of assets and showing them how do you collect and verify data, and then how do you utilize it for use cases that make more money to that property owner, and then maybe even tokenize it. So there's just massive percentage decrease in time, up to 80% faster using this process for traditional things that not only are slow, but become costly because they're slow.
That's a huge number. 80% faster makes all the difference in the world, especially when all people can talk about today's time and how much they don't have and how much they don't can't spend. This is a huge thing, and for certain deals, international deals also, I think in the near future when it becomes more easy, this is going to be a huge game changer, right? So
Yeah,
I think, sorry, you see.
I was agreeing. And if you include AI in all of that, I mean, we're very well aware how quickly AI can perform functions. It's the same thing here, extracting information, finding information. And there's, I'm sure, plenty of opportunity for generative AI as well in all sorts of use cases, designing properties, appraising properties, maybe even trading or creating portfolios out of these properties.
Amazing. This indirectly answers one of the question I had, what kind of metrics makes all the difference in the world that you are doing. 80% time consumption, reduction in time, that's amazing. But apart from that, anything else you would like to mention which is a good factor? I know volume again is a considerable factor here. Easier to trade means more volume, and then days to close you've already explained as well. Rather than 3 months or more, 4 5 months, typically completed in 4 weeks. A great property or characteristic, I'll say, that comes on. And any other factor that you'd like to mention?
Yeah, I think the overarching theme here is that it's reducing risk. And you
uh,
can reduce risk in all sorts of ways using technology or increasing transparency using blockchains. But when you reduce risk, you encourage people to get into an investment. And so the whole reason why you would go through this and then tokenize it is because you have dynamic, transparent, accurate risk. And that's what people want to know. When people say, I'm not getting into something that's tokenized or I don't believe in cryptocurrencies, it's all associated with risk. I'm sure the upside is there in many situations, but so is the downside. And how much downside and how quickly does that appear? There's a lot of concern that was raised with Mantra, the L1
I,
for RWAs that people were claiming. One, that doesn't represent RWAs at all. Like blockchains are a component of this, but anyone can be an RWA
yeah.
blockchain. How do you use it and what value do you offer? And I didn't see that with Mantra. But then the token itself, people bought the token because they believed in RWAs, and 95% of the value disappears. And then people blame it on RWAs, which is like,
That's not an RW.
no, it's not, but it was being conflated as one, and a lot of people they have to learn to separate that. Um, but still, seeing how much capitalization went into that, going from it was worth 300 million, and then it was a billion, 2 billion, 5, and then up to 9 billion US dollars in market cap. Well, that's a lot of value, and to have that disappear, you wouldn't think 8.5 or 8.7 billion dollars of value could just disappear for whatever reasons that it did.
Unless a
But
nuclear
it,
bomb fell on a building.
right, right. And it emphasizes that risk is always present and you can't have that. So the more risk parameters that you could have in place, even for something like real estate, showing this is in a good location, it's been insured, the underlying real estate has technology implemented, they are digitizing elements and modernizing the property manager is really great, the property sponsor, the financial instruments. A lot of people don't take this into consideration. Debt is a lot less risky than equity. People say all the time, well, you should own a piece of equity in a property. If the property goes down in value, the first people impacted are the equity holders. Meanwhile, the bank is always safe and secure. So maybe we should be tokenizing debt instead of equity. You don't want to own a share of a property that could lose value. Maybe you want a guaranteed income. It's not going to appreciate so much, but you want guaranteed 8 to 10% passive income. That's really great. So where are you on the capital stack, and how does that get affected if things go wrong? And then finally, the smart contract. Contracts are designed differently. Some have been audited, some are not. There's different standards. Is this ERC20 or is it 3643 or is it a 7000 series? That's good to know. There's different risk associated with those. And then what blockchain is it on? Is there interoperability? How many people are interested in this? Because
Yeah.
maybe you're ready to sell and there's no buyers, so you don't have liquidity. There's just
Yeah.
so many things that have to be factored in. And if you can calculate that, make that information present, verify that, and then maybe use AI to assist in the decision making or just a financial professional, ultimately you're lowering the risk and you're increasing the confidence that people have in the asset class and the tokenized version of that. And that's what moves money. Low risk, high opportunity.
There are so many similarities in the perspective that you have related to the industry, that with the legal expert that I talked to, we had her on this podcast channel. I was wearing the same t-shirt in that episode as well. And I asked her a question, that what's the most overused word in the tokenized industry that you like, but it's being thrown around like anything. And she mentioned art. She said people don't actually understand RWA, which is actually becoming a nuisance because uh, it's losing its meaning by the day. And your mantra example is the perfect example for that, right? Just because people labeled it as RWA, it going down in value created a negative impact of RWA in general. That's what happened with Luna as well, USD stable coins. If they got destroyed, it didn't mean that stable coins were all like bad. It set the industry a couple years back. But yes, while we are here in this situation and things are moving forward, and you rightly mentioned that it's an environment which is reducing risk and improving trust. And we have understood that blockchain is not just the only part in enabling that trust. Blockchain, along with other technologies, IoT, AI, all three of them, and potentially many more technologies in between, are helping to build this trust. According to you, which technology is going to have more dominance in the real estate industry, which you can see from the kind of interactions you are having?
Well, it depends on what you're trying to accomplish. I think the answer is actually artificial intelligence, not IoT, not AI. And I mean, platforms are going to be there because you access AI through software and platforms and going online. But, well, in many cases, not all cases, but AI, just because it's so versatile, whether it's narrow, broad, or generative, there's a million use cases. I don't have to be creative with it. People can imagine, just take an LLM like ChatGPT, which really isn't designed for solving math problems or extracting data. It's a language model. It's more conversational, but it's being used for all sorts of things. And I can come up with everything.
It's being used to create lines for what to say to your girlfriend.
Right, right. And you could expand on that, and you could say, how do I communicate with any type of person? And there could be a million different personality types. So if I start applying that logic, like there's a million different types of documents that could be extracted. There's a million different math equations that could be calculated. There's a million different regions and cities and anything that could be analyzed, and different types of properties. So you almost have this Googleplex number of use cases for artificial intelligence. It's the same way that the human brain can accomplish anything. That's the point. If AI is going to mimic people, and we have an infinite number of capabilities, at least mentally, thought-wise, then so does AI. And that just means that the opportunity to perform original functions is much higher versus blockchain. It's a ledger. It has one responsibility.
Yeah, it's meant to give a strong foundation to a building, so to say, right? It has to be a database at the end of the day to make it much more secure.
Well, sort of. I often tell people to separate databases from blockchains, and that it's, if a database is the warehouse, the blockchain is the person at the garage door with a clipboard, and they're just recording, this came in, this came out, this is the person who brought it in, this is the person who brought it out. And that's sort of what blockchains are doing. They're saying, here's a wallet, the wallet did a transaction to another wallet. And it's that simplistic. Now, there's a variety of use cases, but in terms of functionality, that's what a blockchain does. It's not going to do anything else. And if it does, it's because a human or an AI is being layered on top of that, or a specific software like a DApp, an application, is being layered on top of that. So blockchain is really not this exciting technology. And it's perplexing that we have as many speaking panels, podcasts, and keynotes on blockchain as we do, because it's almost like an SSL certificate, or whatever the hell HTTPS stands for. I always forget, hyper something. But
No one remembers.
that's sort of what it is. Like, it's just this mundane technology at the end of the day. It can be used in many different creative ways. And that's what Web3 is supposed to be. Blockchain is just a tech. Web3 is all the creative people using the technology and creating communities and use cases, and maybe finding new ways to monetize their music. And so you do get these touch points with other industries, but it's really nothing fancy. I think people should be a lot more excited within reason about artificial intelligence. It's not going to solve everything, and it's still years away from nations not being an issue, or even take it back to people. People have to understand good data versus bad data, signal versus noise, and then how to use AI. You can't just slap AI on to something and say, make it work. You have to have a very specific use case, and it has to be trained on that successfully time and time again. Like, so much data, so much training goes into this. The only reason why ChatGPT and all of these LLMs are so successful, whether it's an image generation or communication, is because they've been secretly being trained for the past 10, 15, 20 years when you're performing CAPTCHAs or as you're typing information into the Google search bar. Like, there's a lot of time that went into this, and people think it's this overnight success, this technology that can change the world. And then they say, well, all AI can do that. That's not true. Not all AI can do that. You have to come up with a business case and you have to train it meticulously. And then there's still the accountability portion. If AI designs something in the real world and the design malfunctions and people die, we can't just say, well, the AI did it. No, there's going to be accountability. Who do we point to that's responsible for that? And real estate and tokenization are one of those highly regulated industries. So I think it's going to be one of the most impactful technologies, but it's not a silver bullet or a magic wand. It still has parameters.
And I'll just share an input with you while we are on the topic of AI. I don't know if even ChatGPT owner knew that this would be the use case for it. If you go on Google Trends and search the top cities in India that have been searching about ChatGPT for the last 1 year in 2024, you will see the top three cities. The first one is in Punjab, North India, which is actually a hot center of 3 or 4 universities. Second one is an exact university location that's there, and third one is also close to universities. So in fact, no one can predict what the use case of AI can be, as you rightly mentioned, millions of use cases. But at the same time, what other thing you mentioned, blockchain has become mundane because it is now in the shadows of AI. It has become the layer on top of which AI can be more attractive. Otherwise, people used to consider smart contracts and ZKP all part of blockchain and then glorify it accordingly. When quantum comes, maybe AI becomes that mundane technology. And the cycle keeps on happening for the next, I don't know how many years, right? So that's a life cycle I think all technologies go through. But yes, for the near future, for the next 3 years, AI does seem to have a lot of potential. I agree with you there. Amazing. So we are already past the time. I know I have to taken too much of your time, but I just have a couple more questions. I try to wrap it up.
Sure.
First one is my personal curiosity. I saw on LinkedIn that you do Sub-Zero tracking. So, what are the parallels between Sub-Zero tracking and frontier tech startup? Like, I'm sure there might be some overlapping parallels between it.
Yes, cold weather exposure, cold exposure in general. I've been such an enthusiast about it. And this went through its own hype cycle. A lot of people were super excited about Wim Hof, and they're saying, let's take ice baths and cold showers and go climb mountains. And then it sort of fizzled away. But I still embody that. I like the cold. I grew up in the cold. I grew up in a state called Wisconsin, which is maybe 800 miles north of where I am now. It's hot and humid down here, but it can be 0 degrees Fahrenheit, whatever the Celsius equivalent is in would be, but it's very, very cold, right? So it's freezing and you get adjusted to that. But then there's also, can you deliberately expose yourself to additional cold? And why would you? Are there health benefits associated with it? And there's a lot of evidence, yes. And then it's also just an easy way to challenge yourself, the same way that you might work out. You can be in the cold, whether
Yes.
it's cold water or cold temperatures or wind. People hate the cold. They despise it. They run away from it, and they put on all the clothes, and you sit in climate controlled rooms where it's a comfortable 75 degrees Fahrenheit. What is that? 15 degrees Celsius or 20 degrees, whatever. It's comfortable. Probably wildly off on those numbers. I don't make the calculations too much, but
Yeah.
so it's just deliberately pushing yourself into a challenge that most people would not only abstain from, but refuse. Like, people will say, no, I'm not going anywhere near the cold. I hate it. I hate the cold, but it's just the cold. The cold just exists. It is what it is. You feel it. And if you can get used to that feeling and you can take it on willingly, I think that says a lot about your grit and your mentality. And so sure, I expose myself to the cold. I like to hike in the cold and make a challenge out of it. And I've rallied people behind that cause who are like, yeah, the cold is cool. We're going to do it.
It might feel difficult in the start, but eventually it's the healthiest thing you can do to your body and create a better immune system, as people say.
Does have a lot of benefits for sure. Yeah.
Amazing. Great. And finally, the last question, which would be your favorite city whose skyline you would love to see tokenized next?
That's a great question. And on my second monitor next to me, there's a big picture of Hong Kong. I really like Hong Kong. It's one of my favorite cities, probably my favorite city that I've been to in the entire world. They're not doing too much tokenization. I don't know if they've tokenized any real estate. I know that there's been some tokenized renewable energy, solar farms, and some infrastructure and green bonds, but it's such a colorful, vibrant, and eccentric skyline and city full of personality and character. So I really like Hong Kong. There's a lot of Chinese cities actually that are tokenized or should tokenize because I think they're just
This is not the right time for a
extravagant.
US person to say that about a Chinese city.
Well, I mean, at least from a tourist perspective, they're colorful, they're vibrant, full of skyscrapers, and that's what makes an attractive skyline for tokenization. I could say the same about some U.S. cities. Maybe New York, there needs to be some more tokenization there, and it's a very
Yeah.
iconic skyline. Not as colorful. We don't outline our cities with LEDs the same way that is very popular in Asia. You look at East Asia
Yeah.
and
Don't
Southeast
get me
Asia.
started on that part. For
Yeah,
sure.
everything's a light show over there.
Everyone is a Tony Stark here.
And I think Dubai is underway. So I mean, that's got plenty of iconic buildings, and they've passed some recent regulations. So maybe they'll do some more tokenization. But I think Hong Kong would be my answer.
Amazing, amazing. I've never been there, but definitely this spurs a small spark in me. I'll definitely check it out sometime soon. Maybe Hong Kong blockchain weeks coming soon.
They do have a lot of blockchain
I know.
events and fintech weeks, so it's ready for the opportunity.
As I mentioned to you before, blockchain weeks are all the trend. As soon as they start, it will be everywhere, and that's my excuse to get out of home easily. I
Yeah.
have a 1-year-old kid, otherwise I don't get to get out. So
Right. Yeah. I feel
uh,
you.
they have their pros and cons. So amazing, Matthew. Thank you so much for giving this extra time as well. I know we are well past your calendar, and
It's
thank
no
you so much
worries.
for giving this time.
Yeah, this has been
These
great.
were amazing insights. And this is actual insights that people need to understand, because while in everyday life, when we see news like a big company signing a contract to tokenize, or when we hear case studies about Mantra and other such blockchains and other such platforms, while I'm not saying some platforms are bad or good, like they have their own pros and cons. No one can judge them. Maybe they face something. I don't know. But people should not relate that to the actual assets that are being tokenized, and they should follow what Building Geek is doing and other such platforms are doing in the market. Again, thank you so much for being here, and looking forward to more conversations with you.
It's been a pleasure. Thank you very much.